Hi, I'm Tom Lydon with ETF Trends here in Hollywood, Florida at the Inside ETF conference with Todd Jablonski, Chief Investment Officer at Principal Portfolio Strategies. Great seeing you, Todd.
Happy to be here, Tom.
A lot of volatility in the marketplace, but now as we're sitting here for 2019, what are some things advisors need to be thinking about?
I think advisors ought to be thinking about late cycle realities. We've come off a period of very low volatility for many years, really crescendoing in 2017. In 18, I think we're starting to see some of the volatility that investors should begin preparing for. In particular, on the equity side, I recommend investors take some risk off the table, begin to position a little defensively. And on the fixed income side, hard to expect much rate decline from here.
Yeah.
We're looking forward to just sort of clipping a coupon more or less out of fixed income.
Yeah, and are you worried at all that the Fed might put their foot on the gas again?
We came into the year expecting, one move, maybe 1.5, and if that happens, sure. I think what you see is investors taking a guess at where Fed tightening cycle is, and then responding when they see where the actual movements take place. It's the alignment of Fed expectations with investor expectations that's critical this year.
Yeah. So specific to portfolios, what are some things that you folks offer that can help guide them through what you've just laid out?
A couple things. I think it's a ripe environment for smart beta. I think that you can look at smart beta as a place to potentially reduce volatility with lower vol investing. Yeah. And at the same time, I'd also point to short-term credits, 1 to 3 year fixed income, as a way to pull down volatility on your fixed income portfolio.
Yeah, absolutely. So no major problems or major storms on the horizon for 19, but if I ask you to go into 2020, a little more fearful?
At this point, we have some confidence. I know there's worries about the pace of economic growth, but at this point, we do think that you could achieve a 1.5 to 2% growth globally. And in fact, a lot of investors we think are overreacting to some of the negative news. So there's reason to keep risk on. We're at true north, but we have that defensive posture. You stay at true north to maintain that exposure, just in case we see enough growth for the virtuous cycle of business reinvestment to continue.
Well, great. Todd, great seeing you. Thank you.
Thank you, Tom.